Good morning. Welcome back to Squawk Box Asia Side. Let's get to Dariusz Kowalczyk, Chief Investment Strategist, SJS Markets, live out of our Hong Kong studios. And staying with us is David Kuo, our guest host director at the Motley Fool. Dariusz, good morning. Great to have you with us. Now, this week, you're saying that it's not so much earnings anymore. It's going to get displaced in terms of drivers by data, a lot of central bank meetings as well. But it's really down to that end of the week, non-farm payroll number. It's all about jobs, because unless we see that bottom recover, housing's not going to recover, nothing's going to recover. What sort of number are you looking for?
I think that we are going to get a very sharp decline in the pace of payroll destruction. We are going for 345K in losses, which is slightly more than market expects, but would still mean a huge improvement versus the last month. And I think that markets are going to react similarly to how they did 2 months ago, with further increase in hopes that second half of this year will see an acceleration of signs of recovery, and therefore I believe that improved growth differentials will favor the US dollar this week, especially on Friday.
Will favor the dollar on Friday. Interesting. You're down 340s, a little bit more aggressive than the consensus, which folks are looking at the bottom of your of their screen. Unemployment tipped to go up to 9.6 from 9.5. When is that going to peak out? Are we looking at 10 or more or higher?
I think it will be around 10 and sometime in the fourth quarter of this year. The pace of gains in the unemployment rate has slowed very sharply recently, mostly due to the fact that the number of the unemployed is not rising that fast. And continuing jobless claims suggest that the deceleration in growth of that particular indicator is going to continue, which is why I agree with market consensus that we will see only a very minor uptick in the unemployment rate in July, and this is also going to be favorable. It will tell us that the labor market is beginning to stabilize.
Dariusz, if you're predicting a worse than expected number on the headline payrolls figure decline, then, as you said, it's going to feed into US dollar on the upside. But longer term, is the bias to the downside for dollar?
There are two key drivers of the greenback right now, and they are pulling in opposite direction. On one hand, whenever there are signs of improvement in market sentiment, there is capital outflows of the U.S., and this is putting downward pressure on the greenback. On the other hand, the U.S. is going to be the first major developed economy out of recession, and the first that will begin the rate tightening cycle. So interest rate differentials, growth rate differentials will all be supportive for the greenback. And I think that by the end of the year, these factors will outweigh the negatives, and the dollar will end at 136 to the euro and 102 to the yen.
136 euro, 102 to the yen. I don't know there, though. We, our guest host tonight, David Kuo, we were just talking about misplaced optimism that this market seems to be suffering from, a lot of investors as well, for that matter. And I'm just thinking, what about all this talk that this is going to be, if we do see recovery, this is going to be a jobless recovery, not your normal run-of-the-mill plain vanilla recovery?
It's true that consumer is not going to lead us out of recession in this cycle. It will be mostly fixed asset investments. And you already see the signs of that in the Q2 US GDP data, where we had a massive destruction or drawdown on inventories, which is something that is very positive, because in the second half of this year, they have to be rebuilt. And they will contribute to an increase in industrial production, and therefore also bode well for employment in manufacturing. So this sector, investments, will lead us out of the recession in the second half of this year.
Okay, listen, Dariusz, we got to go. Great to talk to you, sir. Thanks for the time and the talk. Dariusz Kowalczyk, Chief Investment Strategist. Our pleasure at SJS Markets, and we'll get back to our